delighted to have as a very special guest on This Week in Virginia, Secretary of Finance Aubrey Layne. Secretary Layne, you have given us reports back on our previous show, This Week in Richmond, and we welcome you to This Week in Virginia. Let me lay a little bit of background, then get you started. It was in the middle of July that the governor called the special session, and for the first reason was to work on the budget and then other matters pertaining to public safety. It was August 18th that the session convened, and here as we are about to move into the sixth week, it is somewhat interesting that the budget still is to be uh, presented in the two committees. I mean, worked on in the two committees, and then ultimately get to the governor. And in fact, no offense to the House and the Senate, but there's only been one bill that they've passed so far and sent to the governor, and he signed back on September 4th. And we talked about that bill in our previous show on the elections that pertain to that. But we're delighted to have you on, and you had a great presentation to Senate Finance and Appropriations in the previous week. Chair of the committee, Janet House, said at the end, Aubrey, that was clear and understandable. And I think she also said at one point, you gave us a dose of reality. So we're delighted to have you give something that's a dose of reality and all to our viewers and talk about the economic and revenue update. So let me turn it over to you, and I'll jump in with some questions as you move along.
Well, no, thank you, David. I appreciate being here. Congratulations to you and this new format. And
Thank you.
I'm sure it'll be just as successful as This Week in Richmond was. And I obviously give you a chance to broaden a little bit some of the topics that are going on in the state. And as you mentioned, the budget is something that is very important, not only to the legislators, but to many stakeholders across the state, because obviously, what the state does impacts localities and school districts and other stakeholders. And so hopefully the General Assembly are coming closer to a resolution. As we sat here today on the 21st of September, as you mentioned, we're in our sixth week now or so thereabouts. I'm hopeful that by the end of this week, that at least both houses will have adopted a budget. I'm sure there will probably be some reconciliation that would have to go on, but hopefully they're getting close. And I actually do think there's a lot of work going on behind the scenes with the chairman of the money committees and their staffs working together. But as you said, other events sort of taken over and they've dealt with them, but I'm sure they'll get back around to dealing with the budget. As you mentioned, I did have a chance to speak to Senate Finance and Appropriations last week, and was able to update them on the August revenues. And I guess from the specific point I was trying to make is that, as you well know, we had to do a reforecast. We adopted, or the governor proposed about a month or 6 weeks ago, right before the special session. And that did include about a $2.7 billion reduction over 2 years from the budget that was adopted just this past January, February during the regular session. I guess the dose of reality that the chairwoman was speaking about is that it looks like we're trending pretty close to that revenue new projection. It's good news in that we're not having to have significant layoffs or significant budget reductions in terms of stopping base spending or cuts in either many of the programs. But it does confirm that until we get a trusted vaccine, one that the population will have confidence in, I think we're going to trend along about where we are on this new revenue forecast. And so, as we've said from the very beginning, David, that if you want to get the economy back on track, first of all, deal with the health issues. And I think we've done a lot of that. We didn't have the dire consequences many were calling for, but economic activity, while improving, is just not going to get back to where it was until we have a resolution, either a mitigation or a vaccine for COVID-19. So I guess to sum up what my report was, it was saying, look, better deal with the revenues we have and make decisions on that. We all hope for a better day in the future, but nothing indicates that now based on our revenue collections for the first 2 months of the new fiscal 21.
Part of your report included national and state economic indicators. And I'll tell our viewers that they can look for this report. They can go back to the time when it was presented in Senate Finance, or perhaps later when it's presented in the House Appropriations, and be able to see all of the 16 slides. But we want to show some of them during this time and have you speak to them. And so talk some about the national and state indicators.
Yeah, that is a good place to start, David. As you all know, obviously, Virginia is very much a part of the national economy. And so we'll start with the national economy. And I can report that it is a slow economic rebound. But I will remind the viewers that we are still in a recession. We've gotten back mainly about half of the jobs that were lost. That's true for Virginia also. But there's still many industries like leisure, hospitality, many restaurants that are still in recession. So what we're seeing is a slow, steady pull out of this. I think a lot of that has to do with the mitigating factors, such as wearing face masks and washing our hands and doing social distancing. That's helped bring back some activity, but we're still nowhere near where we were in normal. Now, on the national level, the unemployment rate has come down to about 10%, a little over 10. Remember, one time it was significantly over that. We're adding new jobs, and it looks like initial employment claims are slowing. But at first, it looked like we were going to really come back pretty quickly. But over the last 4 or 5 weeks, it looks like it's just been this steady increase. And if you look at that, that is confirmed. And the Institute of Supply Management, which was trending way off for months, has now started to creep back up. So confidence is coming back into the national economy and here in Virginia, but we still have a long ways to go. And if you look primarily at Virginia, we just released last week. I didn't have this when I was in front of the Senate Finance Committee, but our unemployment rate is now down to 6.1%. We added 68,000 jobs last month. So we're coming back, but that still leaves over 200,000 people that were employed before all this hit 6 months ago that are not employed now. Now, good news is there's some positive things that should be with us for a while. For instance, the Federal Reserve has kept interest rates low and has said it's going to do so for the next 2 or 3 years in that regard. That's helped buoy our housing market, and loan refinances are at an all-time high. And I would encourage your viewers, if you haven't refinanced your home, now's the time. The lowest, I think you can get a 30-rate year mortgage now for under 2.5%. That is startling as to where we were just a few years ago. So Virginia is seeing some similar patterns, David, as the national economy coming back. And in fact, we fared a little better than the national economy in many of our sister states. And that's because of our dependence on the federal government. You know, we sometimes get, we've talked about this before, we get penalized sometimes by saying, well, we're so dependent on the federal government. Well, but that has remained open. Our defense industry has remained strong. Our tech industry has remained strong. Our large employers generally have added employees during this time. So we're trending pretty well. A lot of that has to do with our reliance on the federal government. And one more comment in that regard, we were hoping by this time to have additional stimulus funds coming out of the Congress. There's no doubt that during the depths of this pandemic, that the monetary and fiscal stimulus buoyed not only the national, but the Virginia economy. But David, unfortunately, as we sit here today, and I just had an update this morning, it doesn't appear that additional stimulus or activity is going to be on the horizon, at least until after the election. So we're going to talk a little bit later about the stimulus funding of the CARES Act, But all those monies have to be spent primarily by December 31st. So it would have been nice to know we had a little more runway, but that's where we are today. So overall, it's about what we expected. We're having a slow recovery, but it looks like we're still 18 to 24 months to getting anywhere back near normal, unless we get a trusted vaccine, and that could help push us along a little bit quicker.
Well,
so that's sort of where we are in terms of our economic indicators.
Secretary Layne, when you look at the growth in the general fund revenue collections, it seems like it was a little bit better than the most dire predictions of what it could be. But speak to us a little bit about that general fund revenue collections and also the growth in the withholding tax collections.
Absolutely. The general revenue collections have been better than what many people had feared. And that's why we waited to reforecast until we got some better economic information. I mentioned our largest employers are still doing well, and they pay us over 50% of our normal payroll withholding. So they've held up well in that. But also what's really helped us has been our tax policy. As you recall, the federal government delayed until July 15th the final payment of income taxes from the calendar year 2019. In Virginia, we couldn't do that because our fiscal year ended June 30th. So those collections were made in June. And quite frankly, David, that economic activity related to wealth generation from the previous year and those final payments are really what buoyed us in the months of May, June, and actually a little bit into July. So because some people decided, well, I'm still going to pay Virginia when I pay the federal authorities, and they paid it in July. So our total revenues are running ahead of our forecast right now, about $325 million over prior year. But most of those related to payment of taxes from the previous year. And you mentioned about on an ongoing basis growth in withholding tax collections. It's been good. Our employers have held up. We're running around only about 2% down to last year, which is better than many states. But we're hoping for a rebound because even our revised forecast anticipates that we'll get up about 2% by the time the year is over with. So withholding has been better. It needs to have that continued climb coming up. But you're right, so far, as we go into the first 2 months of this fiscal year, we're trending ahead of our planned revenues. And as you well know, we finished last year not nearly as bad as we thought because of those non-withholding taxes. So that's put us in a good position. And David, what we've really done is we've made a priority, and this was Governor Northam wanting to make sure that we did not have to go into significant layoffs and cuts. And many states have had to do that, and we have not had to do that. Whether it's education funding, it's not as much as we anticipated, but as compared to last year, no one is taking a hit. So that was part of our strategy to protect, and so far, the projections we've made looks like we're trending right on those. And a lot of that has to do with our larger employers holding up well as we go forward.
Secretary Layne, when you talk some about sales tax collections, let me even start with a question that Senator Morrison put to you last week. And he said, if you look ahead and think about December, the time that sales are typically way up for many retailers, holiday giving and purchasing that are made at that time. I found it very interesting, your answer on that about how you're able to take a look this far ahead and see what may be coming in December. So tell us a little bit about the end of the year, and then anything else you want to say about how the sales tax collections are going.
Well, David, this is another good bright spot for us in that we have projected a significant decrease in sales tax, but it looks like they're holding up also pretty well in addition to the payroll withholding. You recall a year ago, the General Assembly passed legislation to allow Virginia for the first time to tax internet sales. And this pandemic, which often happens when you have an event like this, trends that were happening before are exaggerated. And that's what we're seeing here, a move to online retailing. And I mentioned about the large employers across the Commonwealth. Well, that includes the likes of Amazon, who are added employees, but also have seen a tremendous uptick in their sales volume. In fact, online sales have attributed to all the increase we've seen in this category. The traditional retailer is down because people not being able to go to the stores. And again, it exaggerated that trend that was going on before. To your point about where we may be headed for the all important Christmas selling season or buying season, depending on your point of view, one of the things I look at is merchandise coming through the Port of Virginia as our retailers stock up for the holiday season. And because of not just COVID-19, but some of the trade disputes that have been going on, those initial receipts are down. So I don't think the traditional retailers were anticipating a very good Christmas season based on the merchandise they're bringing in or able to get. It may not be, they wouldn't plan on it, but they're just not able to get. So when you combine that with what is bound to be, I don't believe we're going to have a vaccine that's going to significantly impact the Christmas holiday season. Even if there's one announced, as you know, it could come in 2 doses, we're being told, and we're talking about almost 300 million Americans that would not needed to be vaccinated. That's going to take some logistical support. So for the upcoming year, sales taxes based on the selling season, we expect to be pretty close to what we're trending. It's held up better, not the dire falling apart, but a lot because of whether it's restaurants or people actually selling goods have found a way to move these through online sales in that as we move through here. So that's held up again. And in fact, if we looked at our 2 major revenue sources, payroll withholding is about 62% and sales tax is about 18%. So 80% of our revenues. I would say we're probably a little aggressive than what we expect out of withholding, but we're a little conservative about what we'll probably get out of sales tax generation. So it looks like, again, we're trending pretty much right on that new revised report. So not great news, but at least good news that what we projected by waiting and getting good data, we're trending right along there. So internet sales are the story here, David. They've buoyed us very well and kept up this revenue source into the new year.
Secretary Layne, one of your slides had to do with the summary of the fiscal year revenue collections. And what really caught my attention on that slide was what's down at the very bottom of it, which says 376 million ahead of the interim forecast. You have another one on the summary of the chapter, and it was 202 million ahead of the forecast through August. So it appears that the forecasts were on the conservative side, which is not a bad thing to do, and it appears that it was slightly better revenue than was expected.
It is, but remember, Dave, the reason we have 2 of these is because right now the interim forecast is the reforecast that happened just 6 weeks ago has not been adopted in a budget yet. So while we're reporting against it, the reason I kept the old forecast in there is until they adopt the new budget, we're going against that. But you're right. To the revised forecast, we're up about 376 million. But David, that over 250 million of that relates to that non-withholding to the prior year. So the reason we're up is because of that payment of taxes that really related to the prior year because of the July 15th deadline the federal authorities put in. That's why I mentioned that if you look at our 2 major sources, non-withholding and withholding and sales tax, withholding and sales taxes, they're trending right on this revised revenue. So yes, if we make our budget for the year, we'll be up, but it'll be because of collections that really related to the prior year. Now, as you mentioned, if we even compare ourselves to the budget that was adopted back in January and February, we're still up a couple $100 million. But again, a lot of that has to do with those payment of that non-withholding tax. that's not really reflective of economic activity going forward. So our best guide right now is that the revised forecast that we have is a good one. We're trending right to that. And unless we see, again, back to some movement on the health side, it appears that's where we're going to be. Now, again, we're going to reforecast here in the next few months. We'll have better data points. And maybe if the economy does improve, we'll certainly have that ready for the General Assembly, assuming they leave. But when they come back here in January, we'll have another revised forecast for them.
Well, there've been some jokes, if you want to call them that, about when will the special session end, and some would say, well, certainly by 11:59 a.m. on January 13th before they gavel in the next session, but not expecting it to go that long.
Well, David, we're approaching, this year is a short session, so we only have 45 days.
Right.
We're approaching this special session being longer than the regular session coming up. So.
Yes. Well, I'd heard earlier this morning some rumor, some possibility of House appropriations meeting soon and working on the budget, and I'm sure the Senate is doing the same. And as you said, they're working behind the scenes, but to have a meeting and finally then to get those two budgets reconciled, I think it's toward the end of October before you're scheduled maybe to appear back before them again. They could call you back at any time and say, come and speak to us. As I look at the slide that you had on revenue forecasting schedule, some of that takes place in November and in December. And as I was suggesting, there's certainly great hopes that this budget will already been amended by that time, and you'll be looking ahead to the 21 session, which starts on January 13th.
No, we will, David, and hopefully we'll have some better news for them on revenues. As you mentioned, we will do a reforecast. A lot of that'll, once we get the October receipts, that'll give us a good 4 months into this year. And hope we have some better information about what fiscal policy may be or monetary policy coming out of Washington. And so we'll do another reforecast, and hopeful by then we have a much better idea of when a vaccine will be available. We get conflicting reports as to a lot of the political leaders say it's going to happen sooner than later, but when we hear from the actual scientists and those that are in charge, they're all saying it's going to be sometime in the middle of next year before it's widely acceptable. So forecast will be dependent upon that. And of course, I tell people, the economics and the economy are a social science. They're not exact.
Right.
It's based on people's behaviors. And until they feel comfortable about their health, they're just not going to do some things that they would have done in the past. And so hopefully this new forecast will have some information that we can put into it, excuse me, regarding the health update, and that may help us generate a little more revenues, at least anticipated, going forward. But that'll all happen, and as you know, as of December the 16th, the governor will present a new budget, or a revised budget again, in preparation for the money committees to review before the General Assembly gets back in here, as you mentioned, on January the 13th. So we'll have a busy fall to go through. And as I have mentioned to my friends down in the Senate and the House, I need you to finish this budget so I can start planning the next budget.
Right.
We really can't start doing that until we know where we end up on this one. So hopefully they'll get that done here in the next couple of weeks.
When you were moving toward a summary in your report, you spoke of some known commitments and some risk. And between COVID-19 and Medicaid and what's going to happen to the federal government, or what doesn't happen, and then transportation funding, I can see why you refer to it as a social science when you got these other factors in. And also, I've heard you say more than once that the economy is going to be based on consumer confidence, that the consumer feels good about getting back out and doing the kinds of things that we used to do before COVID-19. So in the midst of of all of this, say some additional words, please, sir, about the commitments and the risks that we have going forward.
David, you're exactly right. I mean, I know some are acting as if we've put this COVID behind us, but that is just not the case. We reached over 200,000 deaths this past weekend, and there are many that are suggesting that while we're trending well now, that we may have another round of this. And so this vaccine is going to be very, very important to us going forward. So, and in light of the fact, since there's been no additional fiscal policy coming out of Washington, all these monies they gave us to help offset this expire on December the 30th. And so we know we're not going to be out of this COVID before then. I just saw many colleges and K through 12 are expecting some type of virtual learning into the next semester. So without additional help from the congressional efforts, that means Virginia and the states will be on their own. So I was just trying to point out to the committee, we may have to use our resources to help with that. In addition, so if we do get some additional spending, it may be needed to continue with our COVID-19 response. We know we have an annual Medicaid reforecast. Some are saying that's going to be better this year, but we won't know until November what the utilization there is. And you mentioned, transportation funding and other things. So the point I'm making is we may have better revenues, but they may be already obligated on mandatory spending or money that we're going to need to help us continue the battle against COVID-19. And that all gets back to what happens with federal policy. I think the federal monetary authorities have made it clear they're going to keep interest rates low. They're going to do things to prop up the economy. But as you remember, fiscal policy helped Lewis a great deal with direct transfer payments to individuals through unemployment benefits, with actual checks directly to individuals that help the spending that we've talked about, the PPP, the Payroll Protection Program, loans to businesses that help people on their payrolls. Well, they're all expiring. Those monies have been used. So if we don't have, if the virus does continue and there's no additional help, that's going to impact our revenues and the use of those monies and our obligations because, as again, the Governor Northam has made it clear, our primary obligation is the health and welfare and protection of Virginia's citizens. And therefore, that's why we've concentrated on these risks here. So the point was just trying to make, David, is that we may have some additional revenues, but those monies may be already spent, been accounted for with these obligations we'll have with these funding commitments and risks that are still present in the economy.
Secretary Layne, you wrapped up, and as we near a wrap up today, talking about the authorized use of these relief funds that have come, and you've told us already the end of December the clock runs out for them to be used unless Congress does something, lame duck session or whenever they do something to extend the time that they could be used. And it seems like that at this point in time, there's a little over maybe $1.1 billion that, if I'm looking at that chart correctly, that's still to be used, but it has to be used for specific purposes. And that's what I think the local governments have figured that out now well, and others have too, where they would like more help, but you can't shift it over and use it for something that it's not authorized for.
Now, David, you're exactly right. And in fact, in addition to having more money, it would be very helpful, probably more helpful where we stand today, is to give us time, a little more time to spend these monies, but also a little more flexibility.
Right.
As was pointed out, I think it was in the Richmond Times-Dispatch, it's easy to write a check. It's more difficult to put in programs. By the way, we're still getting guidance from the federal authorities of what's allowed and what's not allowed. As you know, they rushed to say we're getting out monies, but there was weeks and we're still now just getting guidance from how they can be spent, and they have to be spent directly related to COVID-19. and that's very helpful. But it would be everybody when this act was first done thought we were going to be dealing with this for a few months. We now know that's going to be rolling on into 6, 8 months, maybe a year, and therefore the need for the use of these monies has increased. So yes, while we do have 1.1 billion, part of that has been intentional. Now we got originally about 3.3 billion. We've given about 50% directly to the localities. It's been intentional for our part to make sure that we were using them wisely. I remember I was Secretary of Transportation back in the last fiscal decline, 2008, 2009, during that period, and we were getting additional stimulus funds, but they had to be used for shovel-ready projects. And as you know, transportation projects take a long time to develop. So in order not to send the monies back, we were paving roads that we just paved the year before just to make sure that we could use those monies. Now that was not an efficient use of dollars, but as a fiduciary for the Commonwealth of Virginia, it is our responsibility to spend them to the benefit of Virginians. And so same thing here. We've been very, very diligent in making sure we're keeping the rules and spending them wisely. But I would suggest to our federal partners that it could be even more efficient if they gave us a little more time, whether it is for a Rebuild Virginia program by helping small businesses come out of this. We had to get testing and tracing up to speed and coordination with other federal programs. So I will assure Virginians that while we've been diligent, we will be using all those monies by the end of December. And we were hopeful that we'd get a little more flexibility, but it doesn't appear that's going to be the case. But we've been working well with our local partners. We know we have some additional some issues in higher ed and back to school. We just got a $200 million request to help the K through 12 that we didn't know about a few months ago. So we're going to be good stewards, but at the end of the day, we will have to spend these monies by the end of December. But I'm very comfortable that we've got fail-safe plans to help us do that. As a matter of fact, I mentioned unemployment insurance. We're projected to have almost a $750 million deficit in our unemployment fund. That's an allowable use with these CARES dollars, these stimulus. So we have a place we could spend these monies. It would just be, they would be a little better used if we had a little more time to deploy them. But we are thankful for the help that we got, but it would be great if we had a little more flexibility. But nonetheless, we'll be good stewards of these stimulus funds from the federal government.
Secretary Layne, thank you very much for your explanation. Certainly very clear and encouraging. A dose of reality, but also maybe a dose of optimism as we move forward. So we thank you very much for your presentation and look forward to future conversations with you.
David, thank you very much, and enjoy. And again, thanks again for having me today.
Thank you.